All right, we are live, guys. Tonight I am joined by my good friends Russ and Harris, who are at this point somewhat regulars here on the Dividend Happy Hour. Always happy to have these guys on. And tonight, we have to talk about something that we'd really rather not, and that's dividend cuts. Nobody likes them. Everyone faces them if you are investing long enough. And so in tonight's episode, we are going to talk about some things that you can do in the event that you are on the receiving end of a dividend cut. But before we get into all of that, I want to welcome you guys to another episode, another week of the Dividend Happy Hour. And why don't we kick it off with a cheers? Like, guys, what do you guys drink tonight? I got a peanut butter chocolate milk stout, Lost Coast Brewing. What are you guys sipping on?
Guinness.
So I have a Kona Brewery Big Wave leftover beer from the Super Bowl.
Nice.
And then let us know in the live chat real quick, guys, or in the comments below if you're watching the replay. Let us know a couple of things. Number one, what are you sipping on? What did you bring to drink tonight to the Dividend Happy Hour? Number two, what did you buy this week? And I want to hear from you, Russ and Harris, like what you guys picked up as well. But first, why don't we kick it off with a cheers? Thank you guys so much for joining. I hope everyone had a fantastic week. And here's to a big red day on the market, actually a big red week, and hopefully another one next week. So cheers to that.
Let's get it.
Yeah. So what did you guys pick up this week?
You go, Harris. You go first.
Yeah, so this week was actually a big one for me. So what I did is when the Intel news happened is actually the day I do my biweekly contribution. And I went and looked at all my positions that were under Intel as far as allocation, which was Realty Income, Main Street Capital, Stag. What else did I do? Waste management, but that one's higher up. It's just a dollar cost average. I added to all of those. One, because I want to fill in my lower months, but then two, I want to bump down Intel. Then I started new positions in my taxable into Kroger, which is a new position for me. Nice. In my Roth, Shamir, I'm going to shout you out here. I started a position in TD. So finally got my first exposure to Canadian banks. And then I started a position in Vici in the Roth.
You're going TD too. I'm TD.
Yep. What was that last one, Harris?
Vici.
Oh, so wait, that's a new position for you?
Yes, the only REITs I had prior to that was just O and Stag.
Dang, man. Well, good pickup. And at some point I need to get that in my portfolio. I feel like it'd be blasphemous to live in Las Vegas and not have
my
that.
Trip to Vegas really pushed me to start looking into it, so do it.
Yeah. Hey, so I was thinking too, Russ, I want to hear about your purchases because I know you had a pretty big shopping spree this week. But I was thinking it'd be fun if any of you guys ever come to Las Vegas, we should do a video that is touring all of the Vici properties, touring all of the Vici hotels.
I'm in.
That'd be fun, huh?
Do that and then make a TikTok, start screaming, I'm a shareholder, I'm a shareholder.
Just start bossing people around.
Yes.
Yeah.
Oh, they're the top dude. When I went into Vici, we were at New York, and we were eating their pizza there, which my family loved it. And it was so old. I should find out a picture. As I was buying Vici, I had them take my picture. I was like, I am now an owner. I own this property. Like, I'm gonna go wherever I want. Unfortunately, It doesn't work that way. It would be fun if it did. But
did you like New York?
Loved it.
Did you hit
I didn't go on the roller
coaster?
No, you know what? It's so strange. As I entered my 40s, I just developed an irrational fear of roller coasters that I have too much riding. Like there's too much. Like I'm a father and a husband, and so and then my family goes, and me and my oldest daughter, we're scared of them. So, but I used to be Anyways, so this week, I'll just real quick, I bought some SCHD, more SCHD. I'm working toward 100 shares in the Roth. I think I'm at 24 or 25 now. I mean, what I bought more TD, I bought Realty Income, added to Enterprise Products Partners, Franchise Group, ticker FRG, Algoma Steel, ticker ASTL. I also added really risky. I felt like gambling. I told Harris this. I'm not sure. I added 2 more shares of IIPR around $84. That one is pretty risky. But you know what, man? You live once, and I wanted to average down a little bit more. And I'm at 24 shares now. I'd like to get to 25. And I think that's it. I already said more TD. Nice that we're TD guys here. But
yeah. And one of those was the steel one was a new position for you, right? Recently?
Yeah, Algoma Steel. couple weeks ago, I started Algoma Steel. Oh, and this week I sold my Norfolk Southern shares on,
You
I think it was
sold?
Tuesday. I only had 3 shares. Yeah.
Oh,
I didn't like what they did skipping out on that town hall meeting. Just left a really bad taste in my mouth, and just trying to pay people, I think $1,000 per family. They had to leave their homes for days. It just, yeah, it just was a bad look. I didn't like how Norfolk Southern is handling the situation, and a lot of lobbying going on, and it's a whole big thing. We won't get into it, but I only had 3 shares from when I sold, did tax loss harvesting on 3M. So I think it was up 8 or 9%, but that was one of those ethical things. And anyone in the chat, like you may know this. I know a lot of you guys won't invest in tobacco stocks or the sin stocks, but that one just really rubbed me the wrong way. So yeah.
So I want to pull up some of the live chats purchases, some of what they got drinking. But Russ, you were talking, it kind of posed a question for me. It made me think of something. I mean, are there any other railroad stocks you would consider buying, or because it's a pretty important industry? I mean, they're good stocks to hold. I understand your ethical reasons for not wanting to hold NSC, but are there any others you'd have your eye on?
Yeah, Union Pacific. I had owned them and I sold them. I kind of swung trade them, and I wish I would have done it the other way. So I tax loss harvested 3M, and I put that money into Union Pacific and Norfolk Southern. I think I had 3 shares of each, and I had bought when they were way down, end of October, like right when the market was way down. So,
okay.
But yeah, Berkshire. I like Burlington Northern. We have the Burlington Northern line right by the house here, and in Chicago. But yeah, Berkshire Hathaway owns Burlington Northern. So technically, if you have exposure to any ETFs that have Berkshire, you own Burlington Northern. And Geico and See's Candy. Stop me.
Go. For me, Union Pacific would be my number one choice. The way I do it is, I think those industries are very boring. I make it easy. I have the Spider XLI ETF, which is for industrials. I keep it easy. That way I get exposure to like Lockheed and other businesses. There is like, I probably wouldn't pull the trigger on them as individuals because of like the psychology of like, I don't know if I can invest in this price. Make it easy to an ETF and get that exposure into that industry.
Yeah, that makes sense, Harris. So let's go through the live chart real quick, then we'll get into our conversation on dividend cut. So tonight, our friend Jay is sipping a vodka and ginger, and he picked up, like Harris, a little Kroger this week, some SCHD, and some AT&T. Kevin here sipping on some Busch. I'm pretty sure that's like a regular for Kevin, if I'm not mistaken, but that's a classic. Loaded up in the college fridge next to the computer desk. That's awesome, man. Rye here picked up some SCHD, Jeppy, a nice little shopping spree, some other high yielders here, a couple BDCs there. El Dynamico sipping on some coffee in the evening. Remember, everyone, I'm blind, so I can't read your messages, but happy Friday. That's awesome. And then Lucas here is making a very bold move. He actually picked up some shares of Intel this week for a grand total of 13 shares. And we'll talk more about that here in a little bit. Chris picked up some MPW. Nice. There was some news recently surrounding MPW, right? With the whole Stewart thing, maybe selling off, or not selling off, but yeah, actually those businesses now, you guys might know this better than I will. Something about the state of Utah.
Well, they were just downgraded by Simply Safe, and that happened today, I think, today or yesterday. And it's all because one of their tenants is looking like they're not going to be able to pay them rent. I think they have 14 properties. I didn't write down which one. I skimmed through the article, but yeah, man. And then what I put out with the whole Viceroy research allegations about them round tripping revenue looks pretty bad. I think there's a lot of smoke going on over at MPW, and I hope for all like Chris, I hope it works out for you. I hope everyone's wrong, but it's a lot of. What do you know about it, Harris?
So I think I read about this, skimmed it. I think one of their upper up management, I think it was like a COO, if I'm not mistaken, is stepping down or retiring. So there's this whole theory of like, do they know that some shady stuff happening? So it's like not the good timing for it. I personally don't hold MBW, so I haven't really dug deep into it, but I did see something related to that.
Yeah, I need to read up more on that too. I remember reading something about someone taking over all of their business operations or something like that in Utah, and there were a handful of properties. Do you guys know what I'm talking about?
Not off the top of my head.
No, I haven't seen that.
Yeah, I don't keep too close to tabs on MPW. I've talked about them a few times because they are super duper cheap, and that yield is undeniably nice. But
I think
yeah,
they're
there's a
cheap
lot
for a
going on
reason.
with there's a lot going on with that company. But anyway, moving on. Chris, aka Camera, drinking some beer and bourbon, which to me sounds kind of like an interesting combination. Is that a common drink? Popular drink to mix those two?
I drink them together. Well, not together, but yeah, I drink beer and bourbon. So
I mean,
I
worked for
can't
George
handle them.
Thorogood.
shout. What's your favorite bourbon there? Mine's Wild Turkey 101. I love that. My favorite.
Yeah, I don't have much experience with it.
Yeah.
Me either. I just know better to stay away.
Oh, guys, we've got a taker for the Vici tour in Las Vegas. So,
Nice.
fellas, you guys might have to plan a trip out here. We might have to do that. I know Harris enjoys the Vegas. He was here not too long ago and had a good time.
That's an easy sell for my house and us coming out there. Easy sell
Yeah.
to go to Vegas.
Weren't your daughters kind of stoked to come back out here?
Yeah, they've been asking me. They want to go back out. So we were there in November 2020. Dude, it was so stupid. I think for the hotels, the flight, everything we spent money. I don't even think we spent $900 for a family of 4 to spend like 4 days in Vegas. It was just stupidly cheap.
And when we went, it was a Labor Day weekend, and even with the holiday, we didn't spend nowhere near as much as we thought we were going to be. So Vegas is definitely a good way to have a good time on a budget.
I was briefly messaging back and forth on, I think it was Instagram with PPC Ian, and he said something about, it was on a comment on one of his videos, and he was talking about Vegas, how he was here back when he was more thug life or whatever back in the day. And I told him, Ian, you're long overdue for a trip to Vegas, man. And so he agreed. And so, hey, maybe we could really make something like that happen. That'd be awesome.
Yeah. Was that his video where he's talking about how he's changing up his strategy as he's at like the last level of his dividend investing? Dude, that video was hilarious. I loved watching that one.
Yeah. Dude, I did too. That was one of I love Ian. I love his videos, but that was one of my favorite videos of his for a while.
Yeah, agreed.
Yeah. So regarding the MPW thing real quick, Jim here says the company recently got some great news. Its top tenant, Steward, which is the one that they were kind of having some issues with. Maybe they were having some financial difficulty. They agreed to sell its Utah care site. So a different company is taking over those hospitals, I suppose. So anyway, that's what I was talking about. But fellas, why don't we move on and get into tonight's main event? We're talking about dividend cuts. I mean, obviously, we all, as Intel shareholders, received some not so great news earlier this week with a 66% dividend cut. I know I put out a video on it Wednesday. Russ, you put out a podcast on it today.
Yep.
And then Harris, I know you haven't put out any podcasts about it, but I mean, we've had like 3-hour phone conversations. I've had to talk you off the ledge about Intel.
Yeah. I'm recording tomorrow with I have this guy over with the UK that we're going to do something together. He's an Intel shareholder. I am too. So Monday we'll have our Intel conversation released. So there'll be some mention there for it.
Yeah. But anyway, it was definitely a sting to us. And dividend cuts are never fun. So before, we get into like maybe what's the audience or what you can do in the face of a dividend cut. I mean, what are you guys doing with Intel moving forward? What is your plan?
You go, Harris.
Okay, so this is obviously I know that Ryan and Russ, you guys are at very different points of how much you put into Intel compared to me. I'm very lucky that my average cost is $26.84. I only have 4 shares. Before the cut, I was at like a 4.5% allocation. I am going to hold just because I feel like where I started off with it, it's not I only lost like $2 worth of like the projected annual dividend income. So it's not like the biggest no for me. My decision on it though is to not add any more money to it until one of two things. One, I'm going to let it sit for the year and watch it out. Or once Intel, now in the taxable, I have 21 holdings. Once Intel is at last position, and if it gets to a $20 to $22 range, maybe I'll nibble. But I feel like right now, I did not get into Intel because of the yield. I knew I was buying into a business that was beaten up to crap, and I wanted to see if it could turn it around. So obviously, in my opinion, though, if I was in Ryan's position where you have like 50 shares of Intel.
You know what, man? I think I have just over 60 actually.
If I was in your position, I probably would have sold for tax loss harvesting. That's just my opinion.
I mean, it definitely would have helped me with taxes. You know, I'm down about $1,100 with my position right now. But, you know, I'm kind of like you. I bought into this, and I know I talked about this on Wednesday, so I apologize if I'm repeating myself. But, you know, buying into it, same as you, I knew it was going to be a bumpy ride. I knew that there was going to be some sort of turnaround going on. And, I mean, both you and I are young enough, I think, to see this through. We've got plenty of time for them to make their move and see if it pays off.
I'm only have 1 foot in the grave. I'm not that old. I think.
Sorry, Russ. I mean, you're not old either, man. You've got plenty of time too. But you do have a decade or so on us. So, but anyway,
probably more into the or so. Yeah. Sorry.
Well, you're young at heart, so we'll just round down to a decade.
Yeah. Well, I have 140 shares of Intel, averaged like $42, so I'm down quite a bit. And for me, so when a company cuts a dividend, dude, you got to ask why. Like, why is the main question to ask? So for Intel, I'm hanging on to the shares because it's still, I think, part of their turnaround. And just, I never have that gut reaction to sell just because of a dividend cut, unless like the business looks like it's going to be going under and you're going to get nothing for the shares. But so I got a few notes here. I mean, Intel's dividend was like $6 billion and it's right around $2 billion now. So with that $4 billion, they're going to be able to do a lot for the business. And again, guys know I always say a business is a living, breathing entity, and its first order of business is survival. So they need to survive. So they've got $4 billion extra that they can do, or they don't have to pay toward the dividend. I know they have negative free cash flow right now. And that's one of the signs. If a company has negative free cash flow, look out. Like you can't do that in perpetuity. But dude, they're getting $52 billion from the CHIPS Act. They have a $30 billion stake in Mobileye still. They have $80 billion worth of factories and $12 billion-ish worth of debt. So they don't have a lot of debt. And I think right around $20 billion in cash equivalents. So I thought they were going to at least keep the dividend for another year and see if they could make it through. I know just like a month ago, Pat Gelsinger, he said I tweeted it out, the competitive dividend. We didn't know by competitive dividend, he meant more than Taiwan Semi and NVIDIA, but less than Qualcomm and Texas Instruments. But it's right around 1.99% right now, so right around 2%.
Sub 2, like high 190s.
Yeah.
They need to get this right now. Obviously, look, I don't think anybody here is surprised about the cut. I will say, I did not expect a 65% cut. I thought it would have been maybe between like a 35 to 50, but they need to get this right. If they don't get this right, I think they're in deep,
Yeah, so it is part of their turnaround plan. And and I've talked about this, I do intend to exit Intel, but I'd like to exit at least 10%, that like down 10%. And the reason I want to exit, and this, Harris, I talked about this. I said, if I had in my hand, I had an AMD chip, an NVIDIA chip, and a Intel
Taiwan
chip, or a Taiwan Semi. Yeah, pick any three. If I had a bunch of chips in my hand, I may be able to look at what their speeds are. For me, it's hard to understand. I'm just a welder, but the point being that even if I can't understand which one is superior right now, I don't know enough that I would be able with confidence to say that one of these will be the superior chip in 5 years or 10 years, because it changes so rapidly. It's such a highly competitive industry. And it's been kind of humbling to have to say that I personally don't really understand what makes Intel the superior chip, other than looking at sales revenues and saying like, oh, this chip can go this fast and AMD chip can go that fast. You know what I mean? If that makes sense. Whereas like most of us know Walmart and Target. Like, we understand that. We know the good and the bad. I would say the Blackfoot Wall Martians. But if you were comparing Walmart, and those of you listening, I mean, if you're comparing Walmart, Target, and Big Lots, which one of those would you be surprised or not surprised to see not around in 10 years? I know which one it would be for me.
Yeah. I think the biggest thing, not the biggest thing, but one of the big issues a lot of investors had with Intel about this move was what you said, Russ, where the CEO came out like 3 weeks ago and actually said, I mean, they said it in their most recent earnings call. I think the CFO, David Zinsser, talked about the competitive dividend. They were committed to it. But then Gelsinger came out. He was on, Joseph Carlson put this in a video. I don't know. So he was being interviewed by someone, and he basically said, we're committed. He said the same thing. We're committed to paying a healthy. He used the word healthy specifically, healthy competitive dividend. And
then whoever was doing the interview pressed him again and re-asked the question too. So it's like, I'm calling your bluff. I'm giving you a chance to redeem yourself. And he was like, healthy.
But you know what, too? Like, in the earnings call, like, after that came out, I remember reading through some of the comments on Seeking Alpha. People were leaving comments on my Intel video from a couple months ago, basically saying, okay, like he said, the wording is so wishy-washy, competitive. It's like you got to read between the lines. Like that it's kind of indicative of them not really committing to keeping the dividend just by the wording. So people kind of saw the writing on the wall, I think, after the earnings call. But that's still, I think, really make that move. I think moving forward made it hard to trust the management in the minds of a lot of investors. So I think that's one of the reasons a lot of people are selling out. But kind of like, Russ, to your point too, man, like, it's no surprise too that this was going to be a bumpy road, that this turnaround, like we're still like at the kind of beginning stages of it. And so me personally, the way I'm looking at it is by selling out now, it would be like calling the game after the first quarter just because the other team has already scored a touchdown. Let's see how this all plays out. I think there's still a lot of time to see what happens. And like I said, this is still the beginning stages, and they'll be able to use that capital that they would be paying towards the dividend and put it towards executing on their big plan. So you have to look at it from a long-term perspective. And also, Russ, to your point, it's not like the balance sheet is going to be, drowning anytime soon. They have just about $180 billion of total assets and then about $80 billion of total liabilities right now. So that's still looking pretty good.
And like Kevin Burgess just made an awesome comment I responded to. He's like, always buy the business. Look at the business first. You can't just be like, hey, this company cut a dividend, I'm selling. Well, no, like, yeah.
And to kind of go up to that, I'm going to give here two examples of, like, for example, I held Intel because, like I said, I knew this was a beat down business, but back in October, I had a small position in VFC. I sold it before the dividend cut just because when you start looking free cash flow, obviously it's negative just like Intel's, so they match on that. But my basis on that was I bought Intel with the hopes of, like, I'm buying this beat down, I'm hoping it's going to turn down. I bought VFC because I'm a big supporter of the company as a user myself. And I looked at that, to me, where it's like, you look at, for VFC, they were up 88% on inventory from 2021 to 2022. But also, VFC is a company that's right now, with all the unknowns in the economy, they're not going to maybe hold up as well. Intel, though, they're making semiconductors. It's going to be a needed product. So that's why, for me, like, I sold VFC because it's more like a passion thing. Intel, though, it's like, even though no matter what's going on, I want to give it more time because it's something that's more needed.
Yeah. And having said all of this, guys, let's just kind of wrapping up this specific Intel conversation. I wouldn't blame anyone for wanting to sell. I wouldn't blame anyone for just not wanting to deal with it. Get out of it, save yourself a headache, save yourself the time, and maybe put it as something more reliable like Procter & Gamble or SCHD. I don't blame anyone for that at all.
Yeah.
So,
and I love it. And just to wrap up with Kevin, just to say, like, that's perfect. It doesn't fit his model, but don't just sell a company because they cut the dividend. Like, look at the business, make an investor decision or an investment decision, not just cut the dividend, sell, but
yeah,
that could help you out, I think. Yeah.
Russ, with that said, man, and Harris, to you too, just kind of zooming out in general, when faced with a dividend cut, because I mean, we've obviously talked about Intel, we've talked a little bit about MPW, which has some risk. I saw someone mention something like Verizon in the live chat. I saw mention of 3M. When thinking about these other companies that are currently coming with a little bit of risk, I don't know so much about Verizon, but the others for sure. Zooming out in general, like how do you deal with a dividend cut? Like what? Because you said you shouldn't automatically sell it. Well, how should you approach this? How should you look at a dividend cut and objectively determine what your next move is going to be?
So for me, I actually looked at Verizon, and their free cash flow payout ratio right now is 104%. PepsiCo's free cash flow payout ratio is over 100%. That's not it's a red flag for sure, but it's not an immediate hard sell, because Coca-Cola in, I think, 2017 was like 109 or 119% free cash flow payout ratio. So it really needs to start coming down. Like if it's going up, then that's going to be a problem, and I might just be safe and do what I have to do, make a hard decision. But what was the question? Oh, what do we do? Yeah, if a company, again, wait, I forgot. The Guinness is hitting the brain, everybody. What was it?
All
Set
right,
me up
this
again.
is
Pitch
the
it
part
to
of
me again.
this is the part of the live stream where the fun really starts, guys. Yeah, so what do you do? Like in general, how do you approach a dividend cut and look at the situation and determine what your next step is going to be, how to put your best foot forward from here?
You want to answer, Harris, or you want me to finish it?
I'll go with my give you process there to do the brain freeze from the Guinness. Number one for me, why was dividend cut? It's the first question I need to ask myself. That's number one. Two, why did I invest in this company in the first place? Three, I have a rule. If there's a dividend cut, I give myself 2 weeks before I make any decision, because the number one thing to me as a long-term investor is the psychology part of it. I don't want to act on emotion. I want to act on common sense. And obviously, when something either really good happens or really bad happens, and you're really trying to make a decision, you're not going to make, I think, the most wisest or the most thought out decision. So I give myself a 2-week buffer before whether I want to pull the plug or do whatever I need to do.
Yeah,
I was reading the comments. Yeah, for
Real
me,
quick,
if it's no, go ahead.
I was just going to say, Harris, I think that's a really important point that you made about just taking some time to analyze the situation and not be rash. And that's true. That's true when it comes to deciding to sell a stock, as well as obviously when it comes to buying the stock.
Well, yeah, and I'll build off his point and say that if you're emotional, you're not thinking rationally or logically. So anytime that's something I've tried to work on, anytime I'm feeling an emotion, a strong emotion, good or bad, I know that I'm not thinking logically or rationally. So it's best to get your emotions in check, maybe do a pros and cons list. I just finished a fantastic book about Ben Franklin, and he would have a list he would write of pros and cons, and he would wait like 4 days and fill out the list of pros and cons to make sure he had everything, and then just start trying to go over it and cross out. So if one offset one, he would cross those two out and then see what was left and make a decision then. So, you could even do something like that. But again, I think just at the end of the day, it just comes down to the business, and there's many, many great companies that don't pay a dividend, right? So, it's case by case basis. You can't just have, and I'm sure maybe some people do. If it cut a dividend, I sell. But, I guess that's where it comes in as an individual investor.
The beauty of it all is, like, when we talk about personal finance is personal for everybody. Everybody has their own thought process, decision. Nobody fits the same mold. So that's kind of when I want to end it off with that.
Yeah, very true. I mean, the way I look at it, and I wrote a newsletter on it earlier this week, there's kind of 3 steps I think you could take when faced with a dividend cut. Number one, I mean, like both of you have said, assess the situation and understand why the company cut the dividend in the first place. Is it because they are struggling financially, which obviously is not a good sign? Or are they just looking for a more strategic way to allocate that capital? And I think it's possible that you could make the argument with Intel that it could really go either way. But I do think if they weren't in the middle of this turnaround, the dividend would probably still be intact. So to me, this seems like a more strategic way to allocate that capital. You know, why spend an extra $4 billion on the dividend, which obviously we as dividend investors would prefer in the short term. But why do that when you need that capital elsewhere right now, when you have all these huge capital expenditures over these next few years? You know, across the period of 5 years, the company's going to save itself $20 billion by reducing that dividend. But then step number 2, this is something that I try to do in this situation: reevaluate your portfolio and try and see like how much do you have in this position in the first place? Is it a big position for you, or is it kind of like a small fish? And I know for me, you know, Intel, it's only about, I think, certainly less than 5% of my portfolio, and in terms of income, it's less than 4%. So, you know, by having this dividend cut, it's not completely wrecking me. So it's kind of not a huge blow. But then number 3, if you're considering selling, you know, identify something that you want to what?
Oh, just me in the chat. Luis asked, "Is that a face-to-face T-shirt?" So, I didn't mean to interrupt. I'm like the kid in the class that's disrupting the teacher.
No, you're good, man. But step number 3, I was going to say, if you are considering selling, maybe do some research and figure out what you might want to reinvest into. Are there better opportunities out there? You know, and if so, maybe jump ship and move on to the next one. So, kind of like you said, Russ, it all really comes down to a case-by-case basis, and every investor is going to have a different take on it. And that's why we're seeing in the live chat, people say, I'm buying Intel when it drops to this price. Others say, I'm selling it, it's dead money. Others, kind of like us right now, are saying, you know, I'm just going to hold on to it and see what happens. It's really interesting to see how we all digest this information and absorb this differently and make a different move from there. It's really interesting.
Yeah, to top it off there, Ryan. So it's not only the dividend cut. So Intel, it was like a couple months ago, they announced a 20% cut on employment. So obviously they did some job cuts. All of upper management took pay cuts. I think Gelsinger took 25%. I think other ones started tiering it to like 20 and 15%. They also, I think I don't remember if they either stopped or they cut in half their 401k matches for employees. So they're making all these cuts. And as a shareholder, okay, you're cutting costs wherever you can. You better make this happen, because, you know, I said to myself, I give myself a year with this and see where it goes, but they're making a lot of cuts here, and it's like, you better really allocate this money where it needs to go.
So when I was doing some research on them a while ago, then I read that a chip cycle from inception to being out in the market could take, I think, 2 to 3 years. So, you know, Gelsinger has been at the helm? Has it been 2 years now since he took over for Bob Swan?
2021.
So it's coming up on 2 years. So I think you're right, man. I think it's got a little bit of time to play out, and maybe it's a growth company now. I mean, it's kind of funny when I did that tweet, dude. Their dividends almost like right in the middle of some of the major semi players. So, you know what? Maybe this is what they have to do to be competitive, because they were losing market share. And if you're losing market share because you can't invest in R&D because you're paying a big dividend, honestly, it's just, again, it's a business decision. So, you know, hey, cheers. I hope it works out for everyone.
Yep.
Yeah. On that note, I got to crack open another one.
Oh, there you go. Everybody, please make sure nobody please jump over a ledge, please.
Yeah.
Dividend community needs everybody here.
If you're about to, give me a call. I'll talk you off.
Give me a call as well. This is the best community that there is, and we cannot afford to lose not even one single person. So we're here for you.
It's the best around.
Yes.
No, it really is.
Dude, that's Karate Kid.
Who sings that?
But you were singing. I don't know who sings it. It's some cheese from the 80s that was made for the movie, but I remember it, dude. That's like my childhood there. I was like, I know that. I flashed back. I'm trying to respond to Ultra Runner. I was like, I thought I was a kid again.
No, Harris, to your point, man, we really do have the best community here. The dividend investing community is rock solid. And I think I can speak for the three of us when I say we're so grateful to have all of you guys tuning in with us tonight and always supporting us on our YouTube channels, on our podcasts. And it's cool to know we're all on the same journey. We're all working towards financial freedom. And the good thing is, if we just keep on keeping on, just keep investing, keep contributing, and keep avoiding those dividend cuts, we're bound to hit it sooner than later. So cheers to you guys out there.
Cheers.
Yeah. So why don't we, unless you guys have any last thoughts on dividend cuts or Intel or anything, why don't we pull up some questions and see what the people have to say?
I'm not gonna lie, I'm Intel'd out, so let's crack it out.
Yeah.
I thought we were just getting started.
Harris is feeling a little goth over there. It's getting him down.
Oh, goth. Ooh.
If
Joy Division. I'm sorry.
Yes.
You know what? We don't want to start this.
No, I know. Joy Division's amazing, but for me, it's like having the swoop. I mean, I can never do the swoop. I lost my hair at 20, but still, I need the swoop.
After he gets off the live stream, he's gonna turn off the lights and blast The Cure.
Dude, I could do the swoop. You guys don't even know how long my hair is. It's long.
Yeah. I'll actually put some Depeche Mode. All I ever wanted, all I ever needed, and then start doing some goth dancing. There we go.
All I ever
The
wanted,
goth kids from South Park.
all I ever needed.
And do like the 2-step. There we go. All right, sidetrack questions.
Yeah, let me pull some up. You guys, let's keep it up with the gibberish for another minute.
How many viewers did we lose from that little rant there?
Oh, I think we gained 400. Oh my goodness.
I mean, I hope we gained with our beautiful rendition of Depeche Mode.
Yeah.
Yes. Yeah, everyone hit the
Man.
like button. I just saw somebody say that. Let's hit that.
Yes, please do.
Shamir, thoughts on Domino's Pizza earnings?
Where was it?
Oh, he just said it recently. I'm all the way.
I didn't see their earnings. Did they have good earnings?
I think they missed. I think they're down. I think I read something that they're. Oh, I don't remember. I shouldn't talk about things I don't know.
I know they had a double-digit dividend increase, if I'm not mistaken.
Probably could go to Seeking Alpha just that they're news, but yeah, they're one that I'd like to buy. And actually, as I was looking at, I was doing some research into franchise groups, because not franchise group, but for businesses that franchise out, a lot of times they do well. And Domino's Pizza is one of those because, dude, the franchisees, they pay a lot. They do a lot of the heavy lifting, and they're just paying you royalties to slap your name on the building and on the clothes that everybody's wearing. So, Subway. I think Subway is asking $10 billion. I think they're trying to be sold or acquired. They want to give it up.
There's been talks about that, yes, for Subway.
So I got a good
52-week
question
low
here,
on
guys.
Domino's. There we go. Yep.
I got a good question here. We were kind of talking about this before we went live. What do you guys think about Johnson & Johnson? Good entry point at this level? Well, I'll kick it off then. I've been buying Johnson & Johnson these last couple of weeks. Actually, I'm pretty sure every single week this month I've added to Johnson & Johnson as it's kind of come down. I think right now I'm personally down about 5%, and while that's the case, I'm going to continue adding to it. You know, Dividend Kings like Johnson & Johnson usually trade at a premium, and the valuation, there's certainly more discounted stocks out there. But I know for me personally, while I have the chance to average down, I'm definitely going to take advantage of it and load up while I can, because there will be a time where I think it will go back up, and then I won't be buying it. But yeah, for now I'm stocking up on some J&J. What about you fellas?
I think it's going below 150, and that's something. This is something I shouldn't do, playing that waiting game. But I think with the litigation, I think the Texas two-step being blocked really, really kind of soured a lot of investors, and I don't know. Same thing. I think J&J is going below 150. Hot take here, and I think 3M is going below 100. And I think I saw it 107 today, but I would love to add 3M in the 90s, and I've been waiting for that. But they're both fine. Again, and this is why it's probably okay to buy them now, because if I imagine 10 years from now, I can see a scenario where there's still J&J and there's still 3M. The litigation is going to scare out a lot of weak hands, people that don't have solid conviction like we do, that are going to hold through thick and thin. So I think my thesis is once the litigation news starts hitting the wires that you're going to have weak hands and you're going to have a bunch of people selling. And I think there's going to be an opportunity to get some J&J pretty cheap. I hope at least.
Sometimes it's good to just turn off the news because you hear about all these people selling and all the bad stuff, and it makes you probably think harder than you should about your position in the company. But the thing with Johnson & Johnson, I don't know if this litigation is different than others, but a company like Johnson & Johnson is constantly facing litigation. There's constantly lawsuits against this company. The avoidance of the Texas two-step, I don't know what if they would have made a move like that in the past or if that's kind of their go-to move. But I'm wondering if the precedent was set with 3M because they tried to do a similar thing and was blocked. So I'm wondering if the courts are now transferring that over to this J&J.
J&J was first. They did it first,
Riz.
and I believe it was last summer. So it took this long for them to block it. And for those of you that are watching that don't know, all that the Texas two-step is it's a new entity that's formed. It's kind of like a spin-off. So they take with J&J, for instance, they take the talc litigation, all those they take all the talc liabilities, spin it off into its own entity, and then they use a trust. I don't know. I think it might have been a couple $2 billion they fund with a trust, and then all the people can sue. Then they immediately declare bankruptcy with that new entity, and all the, what do you call them? Not litigants. I don't know. All the people that are suing to make
class action lawsuit.
Yeah. So all the people in the class action lawsuit, they can only tap that $2 billion, whatever they put into the trust, and they can't go after the parent. They can't go after J&J, but now they are able to go after J&J, and that's why they've been struggling lately, and the market's been soured on them.
For me, right? So right now, J&J is actually my biggest loser right now in my portfolio. I think I'm down like 7% on it. Obviously, in my case, I definitely want to average down on it. I think what Russ said, it can drop another $5, $10 in share price easy, especially not only with the news, but like kind of like the market's been a couple, the momentum of the market's been kind of going down, which is good for us. But the main thing I did from June 2020 up until now, so the June 2020, which is the low at the time, was I think it was between 156 to 158. It did not drop this low in almost 3 years. So that's the long of a gap that J&J had this much of a price drop. So entry point, it depends on, this depends on you because there's people who still think J&J is overvalued, and rightly so, but you kind of pay that tax for that dividend king, for that loyal, for that company with all these years of history.
Premium. Hell yeah.
I'll still add to it just because it's below my cost, and I think it's just a good company, and I'm willing to put it in, and we'll see what happens.
Yeah. Well said, man. So I want to pull this up from Ultra Runner 26 about Boise Cascade, which is trading at a 3 PE, which is ridiculously low. It sure is. Now, I actually, Ultra Runner, I was looking up Boise Cascade the other night. I actually went through the most recent annual report, and this company's looking rock solid, guys. If you guys don't mind, I'm going to actually pull it up on Seeking Alpha, just show you some of the quick financials real quick. And I want to show you the dividend stats too. So
BCC was on my radar. God.
Yeah.
A few months ago.
Great company. So, and then BC right here, guys, this Brunswick Corporation as well. That's also another one to look at. Boise Cascade. So let's start with the financials. Look at we're on the balance sheet, but the balance sheet's looking pretty good. I actually think they have negative net debt, if I'm not mistaken. They do. Yeah. So as of December even in 2021, negative net debt for the last couple of years, which is great. But going over to the income statement, we can see really solid growth in the revenue. Can you guys see that okay?
Yep.
That chart right there, really solid growth in revenue. Pretty solid earnings growth too, from what I remember.
What's their operating income?
Does it show it on here?
Yeah, go back up. Go back up. See. Right down there, the black one. Right there, operating income.
Operating income. Yeah, that's going up as well.
Good.
For sure.
That's one of, in my opinion, one of the most important numbers.
Really nice dividend growth. Seeing that pretty aggressive there. And then if we go over here to the dividend stats, actually, the starting yield's pretty low, less than 1%. But look at that dividend growth rate, 50%. So that's pretty crazy. And the payout ratio is exceptionally low as well. And for those of you who don't know, Boise Cascade is a lumber and molding company, and I think they're obviously based out of Boise for sure, but they've got distribution centers, manufacturing facilities, all that stuff, all across the country. So they pretty big lumber molding company.
Paper too, right? I believe they do paper.
Yeah, they do paper as well.
Yeah.
I'm sorry I'm left. I'm reading one of the comments. So Lucas asked me a question about the stock I said I'd never talk about on the stream again.
Oh.
But Ryan, can you pull up Lucas's comment, one of the more recent ones, and I'll give my answer
Yeah,
to
let
that.
me scroll down. Oh, here we go. Harris, your thoughts on Vince putting a $9 billion price tag on WWE?
Okay. As much of a fan as I am of intellectual property, which they are one of the top companies in intellectual property, that's way too much money what they're asking for. WWE just hit $1 billion in revenue for the first time this year. Way overpriced. I still think Comcast will buy it. I still have Comcast as the top, but $9 billion, way too much money for this.
Yeah, but you're paying for the intangible, right? You're paying for the name, for the.
I mean, everything. It's just the name, the intellectual property, the Saudi contract that they have for those live shows. I mean, I think they're halfway through with that now, and plus everything else. But $9 billion, I don't know. I'm gonna say just Lucas, no chance in hell. And Vince is actually right up. Where's Vince? Vince is up there.
Is that the shirtless picture you had, Harris?
No, that is not the shirtless picture. That is the ultimate.
Is it the calendar? The calendar that you have?
I don't have a calendar of shirtless Vince. Let's go back to the last live stream. We were making fun of me LARPing. Let's go back to LARPing.
I forgot about that. Oh my goodness.
Dividend
that was
LARP
funny,
investing.
That was hilarious. I totally forgot about that.
Yes.
Yeah.
But no,
so,
overvalued.
Yeah. So what's the deal there? I actually kind of missed that. Is WWE, they're looking to go private? Is that what's happening?
They're looking to sell.
Huh.
Yeah. Somebody will buy them, not for that much. Like you said, what do you say? Comcast, Amazon, maybe? Yeah. I don't know about Amazon.
I say Comcast just because they can tie in a Hall of Fame to Universal Studios and they're a media company. That's just my theory on it. Who knows? Watch Disney buy it or watch Intel buy it at this point.
As long as AT&T doesn't buy it, I'm okay. You know.
Yeah, I think AT&T learned their lesson with all their bad buys in the last decade.
I hope so.
So what do you guys think about AT&T since the spinoff? I mean, it's been a few months. It's been actually about almost a year since the spinoff now. So
quiet. That's good.
I mean, my opinion, obviously AT&T in the 2010s was crap with everything going on. The last two earning reports, there's still room to grow, but this is like the first time I feel like this stock has had any type of like somewhat positive momentum. There's still a lot of debt to get rid of. And I pray to God that there's no dividend increase this year. I'm really against them not doing an increase and continue working on paying off this debt and getting on track. But I mean, to me, my cost on AT&T is like the low 16s, so I can't really complain.
You know, there are companies that I would like to get out of, and I'm probably going to when I can get back to even. I hope someday. But yeah, I did a video, I don't know, a month ago maybe on AT&T, and I showed that if you do a total return, they suck, man. Both them and Verizon, terrible. It's just such a capital intensive industry, kind of like the semiconductors. And that's one thing as I evolve and I grow, I'm really, it's a thing, everybody. If you're in a highly, highly competitive and capital intensive industry, like it's tough. And, you know, you got to sometimes take debt to stay afloat and to keep competing. And it's just, dude, they've had to spend a lot of money on like the fiber and, you know,
5G and everything else.
Right, like Verizon with the 5G, they dumped, I don't know, I forget what the billion, 40 billion or something when they did that, the C-band spectrum auction that they had, you know, they got from the government. AT&T was in on that, and then T-Mobile was like third. They only got a handful, but yeah, I think there's really something to be said. Like you don't see, well, Berkshire's in Verizon, right? So
yeah.
You know.
Russ, what was the total returns for like T-Mobile for like the last 10 years? Isn't it like hundreds of percent?
Really good.
I don't remember it was a lot. It was more than the S&P 500.
It was like a 500%, right? Something.
It was something crazy. Yeah. It's a lot, and they just reinvesting into the business and they're growing. But You know what? I don't know. The telecoms, with SCHD, you get exposure to Verizon, and I think I would just be content having my telecom exposure inside of a fund,
Mhm.
instead of outright.
Do either of you guys have Comcast?
I do not.
I do 10 shares.
Yeah. What do you think about Comcast in comparison to AT&T and Verizon?
Dude, they're a conglomerate. They own a lot. Like Harris already pointed out, they own Universal. They have a lot of. They own
The Philadelphia Flyers.
Yeah, they own the Philadelphia lacrosse team. They own the Wachovia Center, I think it is, where the Flyers and the Sixers play.
Yep.
They own the mascot. I forget his name. Dude, they just have obviously all this, everything. They are a gigantic universe, and I think they're going to try and acquire Hulu. They share that with Disney, and I forget the split ratio. It might be like a 70-30 or something.
I think Disney has a third, if I'm not mistaken. If I remember correctly, it's right about that now.
Yeah, I bought them when they were like $29 a share because they looked undervalued, and now I don't know. I should probably just sell them because I'm up like $10 a share ish, somewhere around that, and I just got 10 shares, and I don't know.
Russ, it kind of sounds like as time goes on for you, you're just looking to simplify things.
Well, dude, I listened to every single Berkshire shareholder annual meeting, every minute of it, and maybe it just rubbed off a lot. But there's something to be said with them. It's crazy, man. It's like sometimes the simplest ideas are the best, like Berkshire did with Coca-Cola, like they did with Apple. I mean, some of those obvious companies are just the best ideas, and sometimes I think we can get too cute and be like, oh, it's too easy. But that's why they say they look for 1-foot bars to step over instead of 7-foot pole vaults. You need a pole vault to go over, because there's no points for investing for difficulty. Like if you can do something really easy, you're not going to get more or less money because it was too easy. So
and to kind of talk about the easy, actually today I asked my dad this question. My dad has nothing in the stock market. My dad's in his late 60s. And I asked him, all right, Dad, if you can go back 20 years ago and you had some money to throw in, if you only could buy one stock based off what you use every day and what you do, what would it be? And he said Home Depot. I go, well, you would have done really good at Home Depot. So sometimes, like, my dad knows nothing about this. And he just said, I just do Home Depot because I literally spend so much money there every freaking time. So sometimes simplicity is better.
Yeah, we've talked about this before, but I think if you are going to start investing, that's a great place to start. Start with what you know. Start with what you use. Obviously, we don't have to bring up valuation right now because I get it. Like some of those stocks are perpetually overvalued, like the Procter and Gamble's, the Coca-Colas, the Pepsis, whatever.
The waste management, I get so much crap for that all the time.
Exactly, man.
But it's for a reason. It's for a reason. You're paying up for quality.
Exactly. Yeah. But Harris, actually, that kind of got me thinking. Like, I don't know if I've ever heard this from you before, but how did you get into investing?
So for me, within the last like couple, like 3-4 years, I got, obviously through my exposure to my 401k. That was my initial start into all this through my job right now, and then I looked at the fund that the money was going into, and I started looking up, okay, what does this mean? I started playing around with it, and I figured out top 10 holdings. And then based off of that, I started looking up companies and figuring that out. And then in 2020 hits, we ain't got not much to do. And then my story of how I really got into this was literally drunk on the couch, laying down, watching PPC Ian. It's the first time where he explained the process and it made sense. And I credit that drunken night on my couch during COVID watching Ian to really get into this now. And then now in 2022, I started the podcast in August. My number one thing for me is, obviously you guys are way more established than I am in the portfolios. I just crossed over 3K. I know it's pennies and it's not much. But the reason I did one penny at a time is just because I know so many people who have no idea that this whole, like, they think of the stock market as Jordan Belfort. They think of the stock market as everybody fire running around. And there is a simple way to do this. And I want it to be like, with the goal with this is, if I can just get one person who had no interest in the market start their journey or maybe not even start investing, just getting on the right path of financial success. That's why I really wanted to push this out.
Yeah. Dude, that's such a good point. Like, when most people think of the stock market, they just think of these things that go up and down and up and down. And people are so afraid because they're like, well, I don't want to lose money. But, there's this whole other dimension to it when you start talking about dividends that is completely detached from that. And I think once that starts to click, like once you really start to kind of get a feel for what dividends are and how they work.
Yeah. Let me kind of top this off here. Really, I know I kind of rambled on there. So
No,
recently, I had a friend who hit me up, knows nothing about the market, and he listened to the podcast. He goes, Harris, can you sit down and explain to me this to like a 5-year-old? I go, would love to. I went to his apartment, and I made a rule for him: is we started $100. We're gonna pick 5 stocks or 5 holdings. I asked him how simple or how involved you want to be. He goes, simple, 3 ETFs. But then the last 2, I told him, name one company you use every day. Name one company that you're passionate about, no matter what the price of the stock is. What are you passionate about? And he said Ulta, which is not even a dividend stock. But I asked him why Ulta, and he goes, I love the company. I love their message. And it's like, okay, well, that's the one stock that it's your job to deep dive and try to learn how to, figure out evaluations and do that. So the first 4 are pretty safe bets, which was VTI, SEHD, McDonald's, Starbucks, and then the 5th one was Ulta, but that's what he wanted to do. So it's good that you have one stock there where you have to do your homework to then kind of build off the learning.
Yeah. By having those, couple individual stocks, those are the kind of ones you learn with. You start to learn about the PE ratios with Ulta, or maybe start to understand the dividend growth CAGRs with Starbucks and stuff like that. And then from there, once you have those few companies that you care about, you can start getting deeper and deeper into the weeds with it. And then it just kind of spins off from there. You know what I mean?
Yeah. Answering to the last question that came into Ray said, has an Ulta done incredibly? Ulta's been killing it, if I'm not mistaken. If you on like the 5-year,
they're solid. They're very solid.
Let's go take a look. So ULTA, in the last year, they're up 40%. Jeez, wow. 156% in the last 5 years.
No, they
beauty, man.
500% across the last 10 years. Yeah. Oops.
People always want to look beautiful.
Well, not even that. With how much the beauty line has evolved, not that I use makeup, but I have a wife and I understand that whole concept and the whole TikTok. I think that whole market is just, there's so much more room that's not even untapped yet. But as you see, I don't wear makeup, so I don't want to give too much opinion on it. But
they have skincare stuff too. Like even for guys, like skincare is important. So they've got all sorts of kinds of stuff for us fellas. No,
it's that weed whacker they got. What's that thing I've seen the ads for? I don't know. Manscaped.
No, they don't have Manscaped there.
No, I don't think they sell it there.
I just. Yeah.
Oh.
But Russ, go to Ulta. You know how they have the face masks for for the rejuvenation of the skin. Get the one for the
collagen, man. The collagen
get the one for your feet. The one for the feet is life changing.
I'm not a big feet guy.
But no, Harris, that's cool that you helped your friend out, man. My kind of I don't know if it's a similar story, but my mom, she's got retirement accounts, a couple of them. She's got a Roth IRA and just a regular IRA, and I don't know, some other stuff there. But recently she came to me and wanted to start another portfolio, just kind of a taxable account, and just kind of really start trying to do her own thing with dividend investing specifically. And so I was home recently this last weekend, and I helped her get set up with Charles Schwab, connected bank account and everything. And pretty soon I think we're going to kind of do that same thing. Just, okay, here's some ETFs or an ETF you might want to buy. Then let's pick a couple stocks to maybe keep your eye on and get your feet wet with, and you can kind of start learning it from there. But I've already kind of thought about what that might look like for her, and like they go to Lowe's every weekend, always home improvement products. So they've got like a Lowe's card, spend a ton of money there. So that'd be an obvious one. They go to Starbucks. They kind of bounce back and forth between Starbucks and Dutch Bros, but Starbucks would be another good one for and then I don't know, maybe even just those two for now. But I thought it was really cool that that she wanted to kind of start getting into this stuff.
You guys got any
you need to have
advice
your
on-
mom on the stream.
Yeah.
Got any advice on 14 and 15-year-old girls, how to get them and keep them interested?
Oh, dude.
Because it's a sum of gum.
Well, I
Believe me.
liked your concept. I remember we talked about this before when the whole COVID pandemic payments came. You gave them the choice of what companies would, and you gave them, I think it was like Tesla and Apple was like some of the top picks for them, right?
Dude, that was like almost 3 years ago now. Now if I say investing, it's like turning the light on and watching cockroaches scatter. Like, Dad's going to talk about investing. Run. I got homework to do. I think I got to clean the litter
why
box.
don't you try pitching Ulta to them? Even it's not a dividend payer, but maybe that gets them to spark their interest, right?
Yeah, maybe.
I don't know,
figure it
Russ,
out.
man. That's such a tough one, man. Like, excuse me. I remember being that age, and goodness gracious, excuse me.
You remember being a 15-year-old girl? Yeah.
I remember being a 15-year-old girl. Yeah. I remember being 15. I think my parents started a custodian account for me when I was maybe about that age, maybe just a little bit younger, maybe a little bit older. But nonetheless, I remember being a teenager and having that and thinking, and I've told this story before, but every Christmas, every birthday, instead of getting like a presents or a new Xbox game, it was like money from my Charles Schwab account. And at the time, I remember thinking, okay, great, thanks, Dad. Like, what am I gonna do with this? Like, what even is Berkshire Hathaway? What's this SCHD thing? And I remember my dad, like, anytime this would happen and that money would hit in the account, we would together, like, I'd just be watching over his shoulder. Okay, this is what we're gonna do. We're gonna put it in SCHD. We're gonna put it in Berkshire Hathaway because it's good. But I just remember being that age to be like, I don't care. I do whatever you want to do. Like, it's fine. And he used to always tell me, because it's been a running joke in our family for well over a decade now. They would always just say, you're gonna thank us someday for this. You're gonna be so glad that you have this. You're gonna be so glad that you did this. And it took until I was probably 25 or 26 to really understand that.
I'll end it with this, is that instead of we do spread aside money for holidays and birthdays and whatnot. So I'll put $100 in and I'll tell them, like, I'm like, no, come here. I'm like, this is what you got. You're going to distribute this $100, $5 into this or whatever. And I make them pick. So at least, it's something.
When I was a 15, 16-year-old young man, I was literally thinking about Halo 3, Guitar Hero, Call of Duty. That's all I thought about at that time.
Yeah. It'll happen. It's good.
I think it's skewing younger though. Like, you're seeing more young people start to get into investing, and it's thanks to more information and more content like this. Hopefully, people on TikTok talking about it, people on YouTube, and they always say like it's not a good place to go for investing advice, which it's not. But at least it's getting people interested and getting it out there. And I know Jack Murphy's watching right now.
I wish I had his thought process when he was 18 years old, 17 years old. I wish.
God, dude, if I could go, this is just what you hear every investor say. If I could go back, if I could start 10 years younger, if I could start X number of years younger, it's so true though, man. And it's just so cool. Like, once it starts to click and you understand that you're doing this and your money is literally making money for you, it's the closest thing you can get to planting a money tree. It really is.
Jack's gonna retire by 35.
Yeah. Right. Yeah. Well, fellas, it's 6:00, and we usually go for an hour here, and and then we got Nathan Robert here. 18 has 12K invested. See, you young guys, like, there's good for you guys. Good stuff.
Nathan's gonna retire at 20.
Yeah. No, but anyway, fellas, I think this is a pretty good place to wrap it up. I want to thank you guys so much for joining me tonight. It's always good having you guys on, and I hope we can do this more often. And it's just always fun chatting with you guys.
I always love chatting with you guys. It's always fun. And now last time it was a LARPing joke, a wrestling joke. Now it's going to be a feet joke. So we add on to the layers.
Yeah. Harris, man, I'm sorry. I don't mean to make you the butt of the joke, but
it's okay. I'm here to be the butt of the joke. It's my calling.
You can, if you want to dish it out to me, I can take it as well, just so you know.
There's nothing to dish out on you on. What are you talking? A peanut, but that's it.
Yeah, well, hey, man, take what you got. You got to work with what you got. But But anyway, guys, thank you so much again for tuning in with me. All of you guys here in the live chat still, all 133 of you tuning in with us tonight. Thank you guys so much for hanging out with us this last hour. It's always a pleasure, and I look forward to seeing you guys next week. And I hope you guys have a good weekend. I will see you in Sunday's video, where I will be telling you about all of my dividend income for this month. It's going to be really exciting. It was a really good month, so be sure to tune in. But you guys have a great night, a great weekend, and we'll see you in the next one.